We look at the stock market performance review for the week. The market opened positive yesterday as the all-share index closed 0.79%. It gained about 856.31 points there at the close of business on the trading floor on Monday. Of course, I also talked to you earlier how the stock worth 2.7 trillion naira were traded within 4 months in the year already as well. Let's speak to a financial and of course equity market analyst, Mr. Ambrose Omordion, who joins me via from Lagos. Good morning, Mr. Omordion.
Yeah, good morning. Thanks for having me.
Thank you so much. Always a pleasure having you. Talk to us. We saw that the stock market, talking about equities worth about 2.7 trillion were traded within the first 4 months of the year. Can you give us a breakdown of the performance within that period?
Yeah, actually, I will start that looking at the reforms of the government so far in Nigeria. We're seeing part of reforms, and like I started yielding results. While we're seeing relative stability in exchange rate, and that also have impacted the performance of some sectors on the exchange. Not knowing that all these companies are from different sectors that they represent in the market, and because those sectors are doing well because of the policy direction of the government, we are seeing that that's also reflected on their price. Because any market of the world, price feed on earnings. We have seen that recently, when there was an adjustment in our FS or exchange rate, we saw that the consumer goods industry were hardly hit, and they posted the worst result for almost 2 years, 2023 and 2024. But at the first quarter of 2025, and also at the last quarter of 2024, we saw that most of these companies are gradually turning back to a positive number. And that has spread the market so far as we speak that we are seeing market making new all-time high of almost 110,000. Today breaking out that level, still that yes, investors are seeing value in our stock. And at the same time, the macroeconomic data, despite these data are missed, we are seeing that because the GDP remain in the up direction, despite that the growth is low, and we are seeing that inflation is also slowing down. And for the second time, we are seeing that the CBN, the Monetary Policy Committee, are retaining rate. That has given a signal that if the month of May inflation figure also go in the south, that we're likely to see that the CBN will start cutting rate in the second half of the year. That also is a signal that people are pushing their portfolio toward the equity market, because anywhere in the world where there is a high interest rate, equity when there's a cut in interest rate, equity market benefits from it. And that is a sign we're seeing already. If the monetary policy less change on interest rate on change in February, also we're seeing it also in this month of May. That signal that we're likely to see. And if there's a rate cut of 25 basic points, that will also impact market positively. Knowing that the earnings that I will release for first quarter beat market expectations, strong numbers in the market, and we're seeing companies that have not paid dividend before paying dividend in first quarter. That have changed the perception of market players. And we are seeing that institutional investors are also coming back to the market, seeing the volume of things so far. For me, it's a good market for Nigeria, exchange, and that's also what attracts more both local investors and foreign to lead the way of NGS.
A very good one there. Let's talk about the performance of the local investor. There seems to have taken control of the market. The market doesn't look vulnerable as it were before when we have foreign portfolio managers as key players. But now the local investor seems to have taken control of the market. Tell us, what are they doing differently? How are they being able? What is the motivation?
I will tell you that there's what we call a fundamental shift in 2020, when we had the post-COVID-19 issue. In 2019, we saw that because of COVID-19, we saw that the foreign investors sold down the position because they are afraid that Nigeria might not come out of it. But in that period, the local institutional investor in Nigeria took over the market, and then since then, we think that they are the one controlling the funds in the market, which is good for the equity market. That means the Nigerian investor can plan with their investment, because a market where you see that the foreign investors are having high percentage of the market, or a kind of, for me, what we saw in the previous year before this change, this shift, we know that before the market was controlled by almost 8% by foreign investors. But now to speak, they have less than 20% of our market in terms of liquidity provision. That tells you that our market is in the hands of local investors, institutional investors, the PFAs, the high network investor, and retail investor like you and I. And that also has supported the market, knowing that here there is value in this market. And on the whole, what really impacted price that since 2020, we have seen that companies on the exchange has constantly increased their dividend, payout, first of all, improve performance in their earnings, because you can't give what you don't have. So this company have really performed in terms of earnings, able to adjust their payment to their shareholders, consistently on that. People are having confidence in this company and they are increasing their stake in the company. That is why we are seeing price of stock hitting new all-time high. Because at the end of the day, companies that in the exchange have taken advantage of what is happening in Nigeria economy, because they kind of understand how we operate here. Even with the adjustment of the FS rate, you see that most of the companies were able to put the number. That is that the Nigeria corporate body, I'll say that, give kudos to them. The corporate body of Nigeria, they really take advantage of even our headwinds to make money for their shareholders. That is a plus for them, and that is why that confidence has been the market of what this performance. And also, don't forget that the month of May in the history of our market is the month where we see that sell in May in material market has always been defined in Nigeria market. And also, I'm not surprised seeing the cost index keep breaking out the 110,000 mark today. But I believe that the month of June, for investors that understand the market or trader, are going to see a pullback, because of what in June it's already a buy market for a sell market for those that understand what I'm saying. Because ahead of any season in July, we expect the market to pull back a little in the month of June. But I believe that this trend we are seeing will continue as far as companies on the exchange going to put for a strong number and support higher dividend payout, because every investment is again the future and for return of either dividend or bonus or capital appreciation. These are the three things investors are looking at. If they are seeing it, they will stay put in the company that are giving them this kind of returns anywhere, whether abroad, local, anywhere, because every investor is there to make money.
Indeed, investors there to make money. Let's look at the larger economy and, of course, the market. Some have said the Nigerian equity market does not mirror the larger economy because when the economy is in trouble, it doesn't seem that the market is not reacting to that trouble. Because in the Western world, you discover that when there is issues in the economy, we saw the reaction in the market. But in Nigeria economy, it does seem that our market is immune to whatever trouble that we have in the economy. Why is that so, Mr. Ambrose?
Anywhere in the world, equity market, stock market is again a result of what takes place in the economy. As we are seeing the market improve, we say that the economy is in that direction of recovery. And I'll tell you that, yes, I'll tell you that our economy remains on a growth trajectory, whether it is low. And also, we are seeing recently improved macroeconomic data, which is also a pointer that, yes, we are trying to see the result of reform, which I said at the beginning of this conversation, that, yes, as we are seeing the reform coming in, against the board, equity market must clear to tell that something is about to happen. And that's why you must follow the equity market. Also, at times, there's what we call market kind of disconnected from the economy, but it did take a long time to correct, because yes, when there's a disconnection, we'll see that it's wrong. But how long would market be disconnected from the economy? It's a matter of time. That means as we're seeing market looking up, and we're seeing also improving macroeconomic data, say that market's pointing to where the economy is. But as I said, anywhere in the world, the stock market is indicator that tells us what's happening in the economy. Let's tell you about the sectors that are doing well and what it will inform investors that what we know called sector rotation, because the economy is not being badly as we speak now. But I believe that we can do better. But as we speak now, as far as the equity market is pointing to something is happening in the economy, that's going to attract funds to the equity market, especially as we start seeing a real change in our interest, because anywhere in the world, what we call circular flow of funds is very, very important. If there's a rate cut tomorrow or in July, according to CBN next meeting, that also tells that funds believe in the money market or equity market. That flow of funds is what every investor, every corporate body, every economist, everyone are looking to see where is the direction of funds at any given time, because it's the NPR that gives an insight where funds is flowing. But with what we are seeing, we're going to see funds flowing more to the equity space. That also impact the economy. If they cut rate in the next meeting, that means business operators in Nigeria will have access to cheaper funds, and that also impact their performance going to the future. That's why I said, as I see the market looking the way it's going, it's a point that there's something about to happen in the economy. That's why I said, equity market anywhere, a good indicator that points to where the economy is going. Yes, at times there will be disconnection, but it doesn't take time. They also will come back as a pointer to what is happening. Thank you.
Indeed, Mr. Ambrose, I know you are a very strong equity market analyst, but let's quickly look at the bond market. It doesn't seem something is happening there. That place has been dormant for a long time.
You expect to see that, because already they are seeing the body language of where the interest is going. Before now, I can see that when interest is high, the bond market has been the place where government, is borrowing, we're seeing high, but now, if the economy starts finding direction, I will start seeing rate cuts. We're going to see. That's why there's kind of a bearish, or a silent or a quiet market for that industry, for that space of the market, the bond market. But I believe that for those that also, risk averse, can still invest. And also don't forget that you and I don't play in that space. That space meant for the banks and the bourgeois in the economy. That means with an investor like me and you will be looking at how can we make money in the equity market. Why those that want to hide their money will be looking that way, and also those that have big money. For me, I believe that for bond market,
right,
every market has its own time. For now, this market is for equity market. This period, why I believe that yes, those that want to place say or diversify portfolio can also have some portfolio, some portion of their investment in bond, because I tell you can't really play out of, because you have to balance your portfolio any given time as a fund manager. But I believe that the more we are seeing improvement in the equity space, more fun entering the equity space. But don't forget that bond is a long-term vehicle. It's not like equity that can go in and come out. For me, those that enter bond and those that don't want to risk, take high risk, and at most times it is the banks that play the bond market because they have the capacity, the big money to play. Now that banks are also going back to almost 500 billion, so that they have lots of funds to play the economy, to borrow, to do investment. But I believe that with time, but all I say that investors or market players should target what is happening in the space. That is make money easily, especially if your return is above inflation. Are good to go. And don't forget that also in the bond market, all the returns we speak today is still negative because of inflation. That will not be attractive for people like me because I can't be anything that's below inflation.
All right.
At the end of the day, I'm working for the government.
Indeed, of course. While the bond market is slipping, we saw the equity market recording 0.79% gain yesterday. Over 800 basis points were added to the all share index there. Give us a breakdown of the trading activities as it went down on Monday.
Yeah, for me, it's a good start for the week, and also that is the last week that will usher in, the last month of the quarter. And I tell you, I think that May is a month that is almost the same, direction with December. After December, in terms of performance on a monthly basis, May is the next one. After that, that will be January. But now that May is already, almost 3 points, 5-6% in this month alone, it's a sign that the month is going to also defy, sell in May and come back in October. But I believe that investors should pay attention toward those companies that has value, that are still at a discount and buying. For me, the market is not doing badly, and also high cap stocks have spotted this rally as we speak. That means for those that are positioned in those low cap stocks, especially as the market pullback in June, that will be possible. But now to speak, high cap stocks have spotted the market at this direction, which is also a good news for Nigeria market. The Nigeria market is hitting all-time high of 10,000 and above. For me, it's a good news for our market. So that yes, companies that have done well to put the index, because I tell you, price always feed on earnings, and also, for me, that's why I said investor in Nigeria, look to them and also traders, because they have made money already. The market has returned up to almost 7% year to date. That's a sign where the market is going for 2025.
Indeed. Before I ask you my last question, I want to know whether there is any listing so far in the course of the year. We've been expecting the NNPCL, the Dangote refinery, to come on board. Yet, why the delay?
It's a free entry and free exit. You don't just come to impress the market. You need to also prepare yourself so that, yes, you have all it takes for it to be listed. I know that they have the capacity, but they have to follow the process. And also they have to be ready, like I said earlier. I believe that as they come, to further support what the market. We have seen new listing this year. We saw the H-call listing in this market. We saw Legend Internet listing this year. So we are seeing listing. More will come in the course of the year.
All right. Finally, now, before I let you go, give us the outlook for today. Are we expecting the market to close southward again today?
Yes, actually, like I told you at the beginning, that market, as we speak, market is trading around 110,000, 103.36. That means market is up by 0.14%. Market already in gain. I think the life of Okomu gaining, the life of RD. For that, if they sustain their gain, the market will close in green at the end of the day.
All right. Ambrose Omordion, financial, of course, equity market analyst. I must thank you for your time and contributions on Business Daily today. Thank you so much.
Thanks for having me.
All right. We appreciate it. We'll go on a very quick break now. When we come back, Business Daily continue. Don't go away.